Welcome to the Rick Helps Real Estate Show, where after a while the little voice in your head says, why am I watching this? Good morning. Welcome to Arizona and happy St. Patrick's Day. We had a couple of snafus on Monday when I tried to load up this thing. I was going and I looked up and we weren't live. So I missed about half of it, but I figured it out.
Let's work the problem, people. Let's not make things worse by guessing.
That's right. Like that movie, that television series called The IT Guys. They call and they say they have a problem and they go, well, did you turn it off and turn it back on again? That's what I had to do. I was sitting here getting ready to go. I didn't have my camera on and I turned it on and it wasn't capturing the video. I mean, anything that could go wrong went wrong. I hope you caught the interview yesterday with Sam DeGreen. That was kind of fun. Now, St. Patrick's Day. That is Pat McMaster's favorite day. And here's why. I'm going to show you where he can't be there today because they don't have parades. But this was Pat in 2019. Right there. He is St. Patrick. He's going to be shocked that I found this video. Now, he took over that tradition from his dad, who was always the Grand Marshal of the parade in Phoenix. And so Pat has taken on that tradition. Don't try to get any refis done today. I think he's going to be interviewed by Corey McCloskey, Channel 3 today. I'm not sure what time that's going to be on, but we'll have to find that and see what that's all about. So here we go. Let's take a look at what's going on in the Arizona real estate market. Oh, and next Tuesday, I'm going to be interviewing a real estate broker from Southern California. You know, it's their fault that our real estate is going up. And I'm going to have fun with that because I don't think it's their fault, but it's going to be a fun, interesting conversation. I want to find out what's going on in that market. So let's take a look at where we're at today. Let's pull up our quick search here. See how many listings we have available on our market. And the active only, 4,067. Not much is changing, folks. The Cromford report, we had 7-day moving average. We had 4,116 homes come up on the market and 4,125. And I made the comment yesterday to Sam. I says, it's almost like people are waiting in line. The number is so consistent. We put a few under contract, and then we go, next group. It's just really bizarre, but it's not changing. And talked a little bit, one of the quotes that Sam said yesterday that I really liked was he quoted Warren Buffett when it talked about real estate. And he says, volatility happens in every market. We don't feel it in housing because nobody's in front of your house screaming prices like the stock market or the Chicago exchange. So I thought that was pretty good. So if I look over here, and I go to the Cromford report. This one's kind of interesting. Remember I told you we can't even come up with a word that's more than frenzied, and they finally did. They call it insanity. And this is the contract ratio by zip code. In other words, you take a look at down here in 85226, 11 active listings, yet there's 81 homes currently under contract. Every time a listing comes up, it goes. That's a very popular zip code because of the Kyrene School District. So 85226, when homes come up, families grab those right away. Up here, this is the Indian reservation. So there's not a whole lot going on. There's one active listing and nothing under contract. Areas of Scottsdale here are called hotter, 142 to 148. And then you have frenzy, and then you have insanity. And insanity seems to be taking over in the East Valley and out here in Tolleson. And we have up here in Surprise, zip code 85351, is not insanity. It appears to be hotter or frenzy. It's kind of hard to tell the difference from the colors, but that's what's going on in the market. It's kind of brutal out there, as you know. This is our average sales price per square foot. They make a comment in this chart that I don't get. I mean, I'm staring at it, reading it, and I don't understand it. It says the chart above is interesting because it shows a widening gap between under contract listings and closed listings. This is a signal that the latter will move up to close the gap. So they're saying these will move up here to close the gap. I don't get what that means. All I know is the interesting part is here in this little spot that the closed price and the list price are relatively the same. It says, let's see. It's also interesting that the average sales price is almost the same as the average list price. Now, we all know that 50% of the homes are getting more than their asking price, but the other ones are getting their asking price. So that line is just solid. It's you put your home up for sale, you're going to at least get your asking price, and that gap has closed. So that says it's another sign of a very strong market. Knock me down with a feather, right? Now, today the Federal Reserve meets, and that's going to have some impact on interest rates. Right now, the treasuries are still going up because they don't believe that inflation is just a temporary aberration and it's going to go away. And inflation is starting to show signs of coming. And that is what the Fed wants, but they want it to come later. And the hard part is you're comparing 2021 to 2020 when everything was just dead and shut down. So, the numbers, it's like saying, I'm up 10%. Well, compare it to 2019, you're probably still down 20. So, it's going to be very interesting today what he says. And he's going to have to be very careful what he says because the market's easily spooked during times like this. And interest rate moves are going to be very volatile. So if he does a good job of saying, look, inflation's not coming, here's why, it's going to be a while, we're not changing our policy, we're not going to back off on buying mortgage-backed securities and bonds. So if he's good at saying that, then mortgage rates will stop busting through. And if he's not effective at that, if people are convinced that the Fed's probably going to start backing off a little bit, then all hell could break loose in the bond market. So we're going to cover that tomorrow, see what happens. That's going to be very, very interesting. Another thing I want to look at that I found this morning, and that is this thing called the hoarding economy. Americans are locking away a greater share of their money. We are not spending our money, and we're a consumer-driven economy, and so we're all saving it. And it says, why does it matter? The U.S. economy is built on our propensity to spend, and the past decade's environment of stubbornly low interest rates, low growth, and economic inequality all could be exasperated in the future as the country leans further into the savings trend. JP Morgan says 50% of the stimulus checks that go out are probably going to end up in the stock market. People are like, oh, well, the market's going good. I'll just take this check and throw it there. And we're saving our money. It's similar to after the Great Depression. That's what people did. They hung on to their money. Like it says here, we saw this in the years after the Great Recession. That was 2008. Human behavior is difficult to change. Now, there's some real complicated math when you get into a Federal Reserve, and they have this thing called SLR. It's very confusing, but basically what it is, to explain it in the simplest of forms, is the Federal Reserve, central banks told the banks that they can go ahead and they don't have to have, they can have as many reserves as they want in bonds, where before they would limit it. Basically, they're just telling them, you can lend as much as you want now. Well, nobody's borrowing. So that's a concern. Nobody's borrowing anything. They are borrowing money to buy homes. I got stammered there for a moment. They are getting homes. So, but watch the headlines, because here's kind of what's going on. You're going to see headlines that rising rates continue to drive down mortgage applications. They're not driving down the purchase applications. It's the refis. The refis are not happening. They've really backed off because, we're over 3 now. So here's the mortgage rates right here. It's showing 3.3. Here's the mortgage purchase index. It's still up, but here's the mortgage refinance index. So that's, don't let the headlines make you think that we're about to see this major slowdown, because it's just not happening. Going back to Axios in another article, this is watching the savings rate right here. This is rent, where people are behind on rent in the United States. And you get down to Arizona and 14% of us are behind on rent, compared to California at 16%. Kind of thought that number would be a little higher. Everybody's kind of hanging around in that 10 to 14% range, except for Ohio at 23, Pennsylvania at 20, New York 22, and it looks to me like South Carolina is leading the pack, and Louisiana. So that's the percentage of people that just aren't caught up on rent, and they're kind of hoping that their stimulus checks will help them do that. But $1,400 check is not going to help you get caught up. So the sluggish spending on activities is hampering the economy. Do you think? So we're not spending money, and we are buying goods. We're keeping Amazon pretty doggone busy, but we're not doing anything. And if you look at here on services, we're still down 5%. Made a comment yesterday to Sam DeGreen. It's going to be interesting to see what happens to the airline industry, because businesses are not flying. They're not having business meetings anymore, which I wish they would have done that when I was in the corporate world. I was always flying to either Denver or Kansas or Mexico City. It would have been nice if they would have embraced virtual meetings back then, but they were kind of stodgy old people, and they just didn't see the value. Now, talking to some of my compatriots that I used to work with, they don't fly at all. They're having all kinds of Zoom meetings. In fact, one guy said it was kind of nice. I got to meet with the people in Cincinnati, people in Seattle, and people in San Francisco on the same day. So are the airlines going to recover with business travel? I don't think so. I think there's going to be too many tubes in the air. I think they're going to have to really concentrate on the tourist industry, and I think that's going to spring back like crazy. And maybe we'll see some good some good deals on flights to go to our favorite vacation spots. But remains to be seen. It's going to take some time. We have some numbers to look at coming up this week that I don't believe is going to change real estate that much. Nothing at all. We're still looking at over 50% of the homes going above asking price. It is frantic and what do I want to say? Insane everywhere. I see that still continuing, but we need to watch the news today and see what's going on. How well does Chairman Powell do when it comes to keeping the market a little bit calm? So it's going to be quite interesting to see if he manages to keep the bond market from having a fit. See you tomorrow. Have a great St. Patrick's Day.